Hey everybody, welcome to Trading Capital's exclusive analysis. In today's video, we're discussing the major indices as it shapes up ahead of the long, important CPI release tomorrow at 8:30. So consensus is predicting a softer CPI print, but we're going to be discussing a few things as to maybe why consensus might be wrong. But let's start off with the technicals and what we're looking at on the QQQ. So the SPX here we have the 50-day moving average, the EMA 113, the daily 200. We're stretched. We're very, very stretched. Yet again, it was a inside day compared to this Friday session. So what I want to first bring to your attention is that we obviously had this daily breakout on the QQQ. You had consolidation, looked like it was a failed breakout, and then you had that big gap up on Friday on volume. So let's confirm the breakout on the Qs. Now, I still think there's a chance we retrace, but believe it or not, I think that this move is overdone and needs to see some consolidation. I think the move has been a little bit too quick, and I think market participants are getting a little bit exuberant because they think the Fed is about to pivot and start cutting rates. But when you have this parabolic move in the Qs, naturally you have to have many inside days to work and digest this off. I find it hard pressed, even if CPI comes in, that we're going to rally much, much higher. Maybe we fill the gap at 382, but I think that would be the high pivot reversal back lower. But what was interesting today is Qs finished negative. They were the weaker sector today. The Russell finished slightly positive and the SPY finished slightly positive. So the QQQ closed at 377.25, and notice how it did not take out Friday's high. So we had a gap down. It did fill the gap, but it did not take out the high pivot on Friday. So we have something to trade against. You look at the SPX. The SPX actually did make a new high compared to Friday's pivot and then closed back in on the session back underneath this key resistance trend line. So with the SPX and the S&P at this massive resistance point in a very extended state, I do think that we're going to see some more downside. You got a little bit of a potential rollover in the RSI that could take you back down to this 49 and maybe even lower, but markets are at resistance. The SPY is at resistance, and look, it tried piercing above that area today, and it could not do it despite yields being down and the dollar being down. So dollar was down today and yields were down today. So let's just erase some of this key price action here. And what I want to show you first off is that this is looking like a bear flag on the dollar. No question, this looks like a daily bear flag on the dollar. But one thing's for certain though is that you do have a potential inverted head and shoulders forming. So let me just erase some of these trend lines. And what I want to show you in the hourly chart, if you draw your trend line from this pivot here, this is your head, this would be your right shoulder. It's saying that there's maybe a potential a little bit more downside in the dollar, but then we should get a big bounce and it could actually bounce higher. So obviously things are going to be pending the CPI print tomorrow. That's going to be the big kicker that I'm certainly watching and all market participants are watching. But when you look at say the yield, so the 2-year yield and then the 10-year yield, we'll take a peek at. So starting with the 2-year yield, the daily chart of the 2-year yield, take a look where we're at. So the 2-year yield, obviously you had your high pivot at the top of the channel, low pivot. Now you're right at the center point. This is showing indecision. Market participants are right at the center point of this channel. You are doing an inside consolidation day over here. And from my perspective, I think we're actually going to maybe have a little bit of a push up in yields. And then any sort of rip in yields, I think, is going to be an opportunity for market participants to buy bonds, which should suppress the yield. So I think if yields start to press up and challenge this trend line again, especially on the short end of the curve, it likely could mean market participants are going to buy bonds and try to push it back lower. The 10-year yield, though, is interesting. So if we look at the US 10-year yield, look what level we're back above. So on the daily chart, I've touched base with this level with my members numerous times. This trend line is the key trend line. We had that high pivot bounce off, made a new higher high in the trend, and then we came down, closed below on a daily chart. We've never confirmed on the daily chart, and we've never confirmed, more importantly, on the weekly chart. After we got that big bearish breakdown on the weekly, we got a bullish weekly hammer candle last week to close us back above that key level. So it's just so fascinating to see that we are right at that support level, and it does favor a continuation bounce a little bit higher. I still have it priced in that the 10-year yield should come up to about this 4.8, 4.87 level before it maybe starts to roll over again and test the next major support. Even if you look on the 20-year yield, I still have it priced in to maybe form I did have a little bit of a head and shoulders pattern potentially forming, but this analysis has changed a little bit. I still have it priced in to go up, but with the head and shoulders negated, since you have a lower pivot high here on the right shoulder, I have a new trend line and channel that I'm watching. Basically, this is the new channel. I think we can chop in this channel from the high to the low for quite some time before we make a bigger directional move. So I think that we move to the high end of the channel, and then once we hit the high end, that's when we'll have a little bit more of a sell. So I'm leaning more bearish on this market at this point in time, specifically speaking with the most recent move up. All right, let's touch base on oil and why oil could push CPI higher. So obviously CPI is taking into account last month's price action. So this month is October. So it's really, we're getting the data for the September 14th period to the September period. So we're getting September data in this set. So if you look at the September data, basically, which takes into account August 14th to September 14th, you're really getting, so from August 14th, if you look at the price action of oil, August 14th, which traded here around 82, you had a small dip, but then you had that big rip to the all-time high. So August 14th to September 14th, which was right on this candle, you had more green days, more positive days, and oil was in a technical uptrend. So perhaps the CPI is actually going to front run and reflect a higher energy print, which obviously we know energy has been a great influencer in the CPI coming down. So it's really going to have to make up some other aspects of the trend. And let's face it, I mean, oil's at some good technical support right now. Yes, it has triggered the head and shoulders, but this downtrend in oil really shouldn't be reflected in the CPI print yet. It will likely only be reflected in the next month's CPI. And then you look at some of the other energy costs that have really been skyrocketing as of late. Take a look at natural gas. So natural gas is interesting because it had a whopping move today. And I did have a little bit of a short trade on this live stream, but nat gas, if we look at October 14th, which was, August 14th, basically from this this green pivot, and then all the way to September 14th, it's been fairly neutral. It hasn't really gone down, but it hasn't really gone up. So there shouldn't really be that much of a change. But then you look at the more recent move it's just done, and the next month's natural gas print, gasoline future, should really be much higher. Let's look at the RBOB, the actual gasoline futures here. And you can see that, okay, so this print will actually come in a little bit softer on the gasoline future side. So, from August 14th down to about September 14th, you did have a little bit of a big gap down and fall. So this one should come in a little bit softer, but oil as a whole should not reflect a decline, in my opinion, on the energy front, which is why I'm leaning a little bit more bearish with the CPI. And let's look at the QQQ, for instance, and how we close. I think it's pretty imperative to look at the mega cap stock. So intraday, 10-minute chart. I'm going to go auto quickly here. The Qs had a late minute dump on the indices. And if we pull up the 5-minute chart or even the 3-minute chart, take a look what we actually triggered on the 3-minute chart late into the session there. This is a head and shoulders. Left shoulder, head, right shoulder. I can actually draw that in just to visually make it more appealing. And we triggered that. No question, we triggered that. So the downside move of this little intraday head and shoulders pattern takes you down to about 376. But then you have to ask yourself, we have a bear gap that was never filled in the Qs. And therefore, if this starts to carry momentum to the downside, you could see more and more selling. And what's interesting, let's look at some of the big names. Microsoft has been the leader. No question, it has been the one lifting the stock market higher. Take a look at this move in Microsoft. You don't think on a multi-trillion-dollar company it needs to digest this gain? We're talking about a 2.72 trillion market cap, trading at a PE of over 30, I believe. Massive metrics, but you really haven't confirmed above the previous all-time high. This could be luring in new investors as if it's going to break out and make a substantial run to the 400 mark. I don't see that. I certainly don't see that yet. What's interesting about Microsoft, okay, so daily chart, we know it's extended, super extended. Your first little curling action on the RSI coming down means that there's plenty of room to fall if Microsoft is to fall. Let's look at the 10-minute chart on Microsoft because it is one of the mega caps. So first and foremost, you have this potential head and shoulder. So left shoulder, head, right shoulder. Big breakdown late into the session. The target of this little mini head and shoulders takes you to about 365.20 on the chart, 365.27. Then, if you were to remove basically these head and shoulders, you also have a bearish bear flag gap that is formed. So another calculation you can do, take your fib tool from your high to your low to the high point of your consolidation. You could see a move down to 363 just based off of a bearish breakdown of this bear flag. So that is yet again another potential bearish technical setup. And then we go to the longer term trend here. We look at this. This is a little bit of a left shoulder, your head, your right shoulder. If you break this neckline here, this flat bottom neckline, you could see a move down to 362. Well, let's look at Apple, the biggest company in the world. Also has that similar bearish structure, and it actually has a head and shoulders pattern, left shoulder, head, big rounding right shoulder. You got to close below the neckline at the ending of the session. On volume, obviously, it's the last candle of the day. And the downside of this potential pattern is really, really big, in my opinion, just for an intraday pattern. You know, you're talking about a move down to this gap fill, which would be pretty imperative. I believe it's just a little over 1% move down that could potentially come to fruition. And then we have to reassess based off of that move as to what comes next. Even if you look at NVIDIA was strong today. Up until the last 10-minute session, you had many people taking positive price action gains. Look at NVIDIA's price action. Look at this look at this beautiful channel. So if we see something similar to this event where you had your low pivot to your high pivot to your sell-off to your bounce sell-off, you could be looking at maybe a pullback to this 50-day MA. If we're going to according to this measured move, we've hit the measured move. You're at the top of the channel, very, very extended. I think you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 green candles in a row on NVIDIA. That's phenomenal. But what we could see in the next coming days ahead of earnings is maybe some more profit taking into earnings. Then earnings could come in well, bounce NVIDIA, and then they could sell it off late into the post-earnings cycle. So that would follow this up move. Then you would have this little down move, which would be this move right into earnings. Then earnings could be positive, just like it was kind of over here where they pop it. And then you pop up over here, and then you could see more selling. So that's kind of what I think is maybe coming to fruition in NVIDIA. But right now, I would not be chasing NVIDIA at this high pivot zone over here. Tesla was the standout stock today. It actually performed very, very well. If we remove all of the drawings from Tesla, you can see it's trying to break out of a potential inverse head and shoulders. Take a look at Tesla there, teetering up against this neckline. It is the more oversold. If you go through the mega caps, I don't think there's really any mega cap closely trading to the daily 200 MA. So this is why I think we're going to see some capital maybe rotate out of some of the larger QQQ stocks, maybe into some of the more beaten now names like Tesla itself. If we look at the Russell's also trying to put in a little bit of an inverse head and shoulders pattern. One thing that makes me skeptical is that bank stocks are looking a little bit vulnerable and weak, and the Russell does hold a great deal of exposure to the overall bank stocks. And you also have this bearish neckline trigger on the Russell 2000. A retrace back to this level could likely be shorted, and then a close on an hourly basis above this level would likely be your stop loss. All right, let me see if I can touch base on anything else. Gold and Bitcoin's important. Gold has basically hit my downside target of this head and shoulders pattern. Now we're starting to see what type of consolidation do we get. You're at a whole host of support, the daily 200, the EMA 113, the 50 daily moving average. I still have maybe a little bit more downside on gold to the low 1900s, maybe 1910, 1901, but that would be a likely buying opportunity. What could push gold a little bit lower in the coming session? CPI. If yields in the dollar spike, gold will likely go lower. But right now, gold is looking very, very intriguing for a long setup. I just want to wait and see how much of this data digests, and just to see if we can get a little bit better of an entry. One stock or one asset class is uranium that's looking poised exceptionally well to move higher. Take a look at this beautiful rounding formation. On watch for a technical breakout. You had a volume surge today, peaking above this downsloping trendline breakout. Target of this pattern takes you to about $30, $31, call it. maybe even 31.58. 31.58 just happens to be the previous high here. And this is a big base that's been developing in uranium, which could send it soaring higher in the coming sessions. So keep uranium on watch. But let's move along to Bitcoin, BTC, USDT. Bitcoin is starting to see some pullback. You haven't confirmed above this key trend line breakout yet. So if you take your COVID trend line low, all the way from your COVID crash to your high pivot zone over here, to your high pivot zone over here, this is the trend line Bitcoin is currently struggling at. It's got a pop above, got another positive daily green close above, but never confirmed above this high wick. And now this is all inside consolidation. You lose this trend line, and I believe we're heading back to the low end of the range at around 33.5, and then likely even a test of this 32,000 level. I think that would be a good opportunity for maybe a quick day trade, swing trade bounce. Ultimately, I do think Bitcoin is eventually heading back to the low end of this channel. I'll just map it out really quickly here, just as to how I think that this price action may unfold. So I think that Bitcoin is going to get a flush down to here. Let me just draw that again. Then a pop back up, creating that little bit of a lower high. Then I think we get a little bit of a pop back down there, then a pop, and then ultimately I think we test the low end of this range before the bigger move to the high side comes in Bitcoin. But again, right now Bitcoin's still one of those stronger sectors, and it's certainly been one of those risk assets that have been performing well with the QQQ. On that note, please give this video a big like down below. Definitely check out my website at tradingcapital.ca, where I'll have a whole host of potential trade setups for my members, additional insights and videos. But with the markets being at resistance ahead of CPI in a very extended form, I find it hard pressed to see any sort of rally hold up. Maybe we can get a pop off of CPI, but I expect that to be faded, and likely if it is a positive gap up in CPI tomorrow, I think that market participants, when the market opens, will automatically start taking profits and selling the news rather than buying the news. So pay close attention to what we get with CPI and what the dollar and yields do. But I think that any sort of pop up tomorrow is a great chance to get short and sell and fade the gap up if that is to happen. Now, if CPI comes in hot, then I think we're going to gap down and continue to bleed lower and open up a little bit more of a bearish gap that we could create. On that note, thank you all for tuning in. We'll see you on the charts a bit later.